Hey guys, welcome back to my YouTube channel. Today we are going to be doing the income statement. So I'm gonna, income statement is long, so I'm gonna try to rush through the process. If you have any questions, please make sure to ask. If you have anything that you'd like to request for me to do, please make sure to ask in the comment section. If you didn't understand something and you need me to go over it, please make sure to ask. Thank you. So when doing your income statement, the first thing I'm going to advise you to do is that just focus on your adjustments and information. Fill that out first, and then once you're done filling this, then you can go back to check what's missing, what's there, what's not there, what you need to fill out. So the first thing we're going to do is read our first adjustment. It says a physical stock taking on the 28th of Feb 2021, we fill the following. So a physical stock taking is when you count the amount of stock you have, and then at the end of the year you're saying what this is the amount of stock I have, right? And then when you go to your pre-adjustment trial balance, you're going to see the stock that you had, which is your trading stock, was 174. So this is the stock that they initially thought they had, but then when they started to count, they realized no, you actually have this much stock. So when the one that you have on hand after counting is lesser than the one that you thought you had, it means you have a trading stock deficit. When it's more, it means you have a trading stock surplus. So here you can already see they already told you that you have a trading stock deficit. So what you're gonna do, you're gonna take this one, which is 174,180, then you're gonna minus what the one that you have on hand, which is 171,020. No one has to know, baby girl. Sorry, I didn't see that wasn't showing. And then you're gonna have your total, which is what, 3,100, right? Then you go to the second one. It says stationery was 1,420. Then when you check your stationery this side, it's how much? It was 12,520, right? So you're gonna go to stationery, say 12,520 minus 1,420. You're gonna get a total of 11,100. And then here it says packing material used during the year amounted to 11,200. So when you're accounting for your operating expenses, you want the total what that is used. So your total use for your stationery is what is 11,100. Here they already told you that this is the total that was used. It's not the stock that we have on hand, it's not the stock we thought we had, it's the one we used, the total expense. So you take it as it is, as 11,200. You go to your packing material, you say 11,200. And then the second one says utility account totaling 3,180 due for Feb 2021 will be paid on March 10, on the 10th of March 2021, right? So because they said that it's still gonna be paid, it's still an expense that we haven't paid, so it's gonna be a positive. So you're gonna say utility, which is a total of how much from here? It's 42,210. So you're gonna say 42,210 plus the 3,180 that we owe. It's gonna give you a total of 48,370, right? So the reason you're adding it is because you still owe it, right? And then it's gonna go on. Sorry, as I was explaining, and then you're gonna take your 3,180 and put it as accounts payables on your balance sheet. The second one says an amount of 2,900 was paid to Reality Ads on the 25th of Feb 2021 for an advertisement which will appear during March. So that is what that is, account paid in advance, right? Goes in your balance sheet as account receivables. So because it has an extra payment for what was advertisement, you're gonna have to subtract it from your advertisement. So your advertisement initially is how much? It's 17,008. You're gonna minus what? 2,100. Why? Because it has paid in advance, meaning now what the company of advertisement owes us, we don't owe them. Then you go, it says here rent income includes rent for March 2021. Rent was increased by 750 from the 1st of Jan 2021. So what you do here, you're gonna write your timeline. Sorry, how am I gonna hold this? you're gonna write your timeline. The timeline is gonna be what? It starts from March, April, May, June, July, September, October, November, December, January, February. How many more months do they pay? They said rent was increased by 750. February, March, so they paid March. When was rent increased? From the 1st of Jan, rent was increased by 750 plus. So meaning what? This amount for rent. How much is your rent? Ish, I can't see. Where's rent? Rent income is 99,750. So 99,750 is inclusive of the 750, right? So you need to calculate the months the 750 is in and say 750 is how many months times 3. You're gonna get a total of 2,250, right? 2,250. Then you need to remove this amount from this initial amount, right? Because this amount is inclusive of the 2,250, the increase. So you want the amount without what? Without the increase. So it's gonna be 99 minus 2,250. You're gonna get a total of 92,500. And then you calculate the months the rent was paid for. It's how many months? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So it's 13 months, right? So after that 13 months, you're gonna get what? You're gonna get 7,500. But what do you want? You want the rent for March that was paid extra, so you can exclude it from the initial rent. So it's gonna be 7,500 plus the 750 that you excluded, that was the increase. Then your total rent is gonna be 8,250. Then you come here, you say what? You say rent is what? 99,750 minus the 8,250, which was the increase. Your total for rent is going to be 91,500. So this is your rent for 12 months. This is the rent that was received extra. So your rent is going to go to your balance sheet as what? As account payables, because now you owe the person rent because they paid for an extra month. The next one says provision for paid debts must be adjusted to 5% debtors. What are your debtors? Your debtors is your what? Your debtors control. So you're basically gonna say what? You're gonna say 59,500 times what? Times 5%. You get a total of 2,975. Then you come here for provision for bad debt adjustment. Your provision for bad debts at the beginning was what? 3,500. So you got the total of the amount of people that were not going to pay. The amount you're not going to receive was 3,500. But then it turns out that the amount you didn't receive is what? It's 2,950. So you made a profit of what? Of 525. Then you get your total here. You're done. And then the following information appeared in the bank statement received from Netbank. So here, what you do, number one, you need to know which one is a bank charge and which one is not a bank charge. So your service fee is your what? Your service fee is a bank charge. This is a bank charge. This goes under what? This goes under your interest expense. It's not a bank charge because it's interest on overdraft, right? So what you're gonna do is take the interest on overdraft, which is 170, go here and your interest expense, then you say 170 plus, then you say your bank charges is 1,120 plus what? 320 plus, you come here, you also have bank charges of what? 3,560. So plus 2,460, and then you have another interest on overdraft, which is 1,160. Then plus your loan, which you're gonna cancel it. Then your total here is how much? Always show your. So your total for your bank charges is 5,000 rands. Then here you still need your interest expense. So you come here, it says the loan statement from Netbank reflects the following: 450 payments made. So here the formula is what? It's opening balance plus interest minus repayment is equals to what? Your total balance. So it's going to be 450 minus 60 plus this, and then your total, which is, oh sorry, you can't see, which is 399,860. Then you do back forth, so it's gonna be what? This plus this minus this, you're gonna get a total of 9,860. So that's your interest expense. If you don't understand like this in detail, please check my video calculating interest expense on loan. There's a video I posted already, so it's gonna be 9,860. And for provision and for rent as well, if there's something you don't understand, there's like mostly a video posted explaining it in detail. So you're gonna get your total for interest expense, which is, so your total expense is gonna be 11,119. And then depreciation for the year amounted to 33,030. So it's just copy and paste. And then you're gonna look at discount allowed. You come here. Where's it? Discount allowed is 13,710. Oh, that's maintenance. Sorry, it's 11,007. See, it's important to like double check your things. Then you're gonna get your totals. So now we're gonna go to your sales. They didn't say anything this side, so it's gonna be what? 954,300. These are your sales. Minus what? Your discount, your debtors allowed. My phone doesn't have storage anymore, child. So you better watch these videos so I can like get it since sales minus debtors allowance. It's gonna be 29,620. Then you get a total of 925,680. I don't know if I should just like do the total for you guys, or you're gonna do them yourselves. So you just get your total for here, total here. You subtract operating expenses. Let me just calculate the totals off camera, and then I'm gonna come back and show you guys the totals. That's it for me, guys. This is how your income statement is supposed to look. These are all your totals that you got. So make sure that you double check when you're calculating, because you're human, you can make mistakes, things like that can happen. So always double calculate, always make sure that you put your brackets and your calculations here so that you can get all of those extra marks, because no one's going to give you a mark for something they don't see like how you calculated it. So always make sure that you calculate, your calculations show on the side, and you double check, you calculate your zeros, because you know when you're stressed you can like add extra zeros or leave a zero out. The next thing you lose in marks because of that. So yeah, don't forget to like, comment and subscribe. Thank you.